Okay, next order of business. It says to prepare T accounts to represent the ledgers with balances from the unadjusted trial balance, which is this right here. And it also, this is what we finished. We prepared necessary adjusted journal entries for items A through H. It always says this, and yet it was for items 1 through 8. And this is some weird thing with the Word document. I keep changing it to A through H, and it keeps putting it back as 1 through 8. So I'd done it a couple of times or so, and I gave up. I'm like, okay, fine, whatever. You know, I don't care anymore. Anyways, post them to the T accounts, the adjusting journal entries. Assume that adjusting entries are made only at year end. Okay. Update the balances of the T accounts and prepare an adjusted trial balance. So we're going to do this step at a time here. What I have is a printed up, this is off of an Excel spreadsheet, but I did T accounts right here, and I've already entered in the balances from the unadjusted trial balance here. So all the accounts and all the dollar amounts have been put in here. As you can see, there's balance next to each one of these numbers, balance, 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 and so on and so forth, all the way down, all the way across. Okay? And so I've got all the dollar amounts from the unadjusted trial balance. All I have to do is update with numbers that I have from my journal entries. So what we do is we start with the first thing. There was no adjustments to cash, so cash hasn't changed. It doesn't budge an inch, so nothing happened with that. I'm going to go ahead and total cash for $34,000. Accounts receivable did get hit, and I can go through here and I can scan through each of these journal entries to see if I can find the one that is for accounts receivable. So that's what I'm going to do here. I'm going to start looking through line by line on my journal entries until I find the one that had to do with accounts receivable. And as I go down the line here, I keep looking, and there's one right there, accounts receivable, a debit for $7,500. So I'm going to put $7,500 debit over here on this side. Okay, so I make sure I do debit to debit, or if it's a credit, I do credit to credit. Okay, teaching supplies, we did something with that, and here it is right here, teaching supplies, a credit $5,200, so I do credit to credit $5,200, making sure I keep everything straight. Prepaid insurance, I have a prepaid insurance right here, credit $2,400, so credit to credit for $2,400. Prepaid rent, let's see, we have it in here somewhere. There it is right there. Prepaid rent, credit $3,000, so I'm going to go credit to credit for $3,000. Professional library, $35,000. That did not change because I don't have anything in here. So professional library stays at $53,000. However, the accumulated depreciation for professional library, we did do something with that. And here's the accumulated depreciation for professional library. Credit $7,200. Okay, good. Equipment, we didn't do anything with that, so that stays the same at $80,000. And accumulated depreciation for equipment, we have it right here. Credit $13,200. Accounts payable, did we do anything with accounts payable? I don't think we did. No, so that stays the same at $26,000. Salaries payable, here we have salaries payable right here, at $400. Unearned training fees, we did something with that. Oh, there it is right there. Unearned training fees, 5,000. So debit to debit for 5,000. Capital did not change. We didn't touch that one, so that stays at 90,000. And I don't think we did anything with cash withdrawals either, so that stays the same also. And slide this up here so you see that. So T-Wells cash withdrawals stays at 50,000. Tuition fees earned. We did have tuition. Where was that? Up right there. Tuition fees earned. Credit 7,500. So credit to credit for 7,500. Training fees earned. We had training fees earned right here at 5,000. So credit to credit for 5,000. Depreciation expense professional library. There it is right there. Depreciation expense professional library. Debit 7,200. So debit to debit. And then depreciation expense for equipment right here. A debit of 13,200. Salaries expense, we did have that. Salaries expense for $400, debit to debit for 400. Insurance expense is way up here at the very top. So we had insurance expense debit 2,400. Rent expense, we had rent expense right down here at the very bottom. Debit 3,000. Next, teaching supplies expense. We did something in here right there, as a matter of fact. 5,200 debit. Advertising. We did not do any advertising expenses, so that still stays at 6,000. Utilities expense, again, we did not do anything for utilities expense, so that stays at 6,400. Okay, the rest of these that have not been totaled up, we'll go ahead and total these guys up. So accounts receivable was 7,500. Teaching supplies was 2,800. That was that really weird one where they gave you the answer here, the 2,800, and you had to back into the journal entry of 5,200. Prepaid insurance is going to be 9,600. Prepaid rent, we have 3,000 and 3,000. They actually cancel each other out, so there's 0 for prepaid rent. Professional library, okay. Cumulative depreciation, 10,000 plus 7,200 is 17,200. The equipment stays the same. Cumulative depreciation for equipment, 15,000, 13,200. That's going to be 28,200. So 28,200. Got that. There's 400. Unearned training fees, we had 12,500 and 5,000 debit. So these are going to wind up going against each other, but this is a bigger dollar amount, so that's why it's going to be a credit balance. So unearned training fees are going to be 7,500. The difference between these two dollar amounts. Capital stays the same, withdrawals the same. Tuition fees earned will be 130,000 or 131,400. Training fees earned 45,000 total. Depreciation expense, 7,200. Depreciation expense, 13,200. Salaries expense, 50,400. Insurance expense, 2,400. Rent expense, 36,000. Teaching supplies expense, 5,200. Advertising, okay, the rest of this is done. So now I've totaled up all of my T accounts according to the instructions that they give here. Update the balances, that's it, okay. And then prepare and adjust a trial balance. Okay, folks, this right here is your adjusted trial balance. What I'm going to do is then update my adjusted trial balance with the numbers that I have totaled up here. Okay. Again, for every one of these, I'm going to look over here for the same corresponding account, and I'm going to take the ending dollar amount that I balanced out here. So cash is going to be 34,000. Accounts receivable, 7,500. Make sure you do debit to debit, credit to credit. Okay, keeping that straight. Teaching supplies, debit, 2,800. Prepaid insurance, debit, 9,600. Prepaid rent, 0. Professional library, debit, 35,000. Accumulated depreciation, professional library, credit. Make sure you keep straight. Oops, slide this up here so you can see it. Accumulated depreciation for professional library is a credit for 17,200. I have to put 17,000 credit over here, 17,200 credit over here. I got to match credit to credit and debit to debit. Okay. Equipment, 80,000. Accumulated depreciation on equipment is a credit, 28,200. Accounts payable, credit, 26,000. Salaries payable, credit, 400. And unearned training fees, credit, 7,500. Capital, credit, 90,000. Withdrawals, debit. Can't see it down here, sorry. Debit right there, 50,000. Okay, right there, 50,000 debit for withdrawals. Tuition fees earned, credit, 131,400. Training fees earned, credit, 45,000.